Hello and welcome to Bloomberg. Quint, Agam and I are here to wrap the markets for you. The Reserve Bank of India in its sixth bi-monthly monetary policy kept the key interest rates unchanged. So the repo rate remains at 6.25%, and that really has been on account of their commitment to meeting the 4% CPI inflation target that they are aiming for March 2018. But the biggest surprise factor in this time's policy was the shift in policy stance from accommodative to neutral. Additionally, they also said that the global inflation was picking up, so priority continues to remain inflation as far as the RBI's focus is concerned. That apart, they also said that the improvement in they have seen some improvement in the gross NPA numbers for certain banks on a sequential basis, but the profits of the PSU banks could continue to remain under pressure. Of course, that's not good news for the banks, but what had our poll predicted?
Well, so we had asked whether or not we could see a cut in repo rates, and about 51% of you had voted for, well, yes, there would be a cut, and about another 49% of you said no. Well, 51% of you have standing correct, about 49% you have got it correct. But Shraddha, we've seen a sharp rise in government bond yields today, didn't we?
That's correct, and the most appropriate markets to look at when it comes to the takeaways of the monetary policy and the impact is of course the debt and the currency markets. So the bond yields jumped sharply after the policy announcements by 25 basis points to 6.687, a level that was last seen only on November 9th in the immediate aftermath of the demonetization announcement sometime around this time. But the bond yields, the surge that we really saw today of 25 basis points was the biggest intraday jump in more than a year. So basically the markets probably were not positioned for a change in stance of the policy, plus this entire disappointment over signals of an end to that easing cycle probably led to that big rise in the bond yields. Even if you look at the rupee, it has continued to outperform its emerging markets peers over the last month or so. It has appreciated quite a bit. So today also the rupee continued to appreciate. It was trading 12 paise higher to the dollar at 67.29. So as soon as the policy announcement came in, the rupee depreciated or fell a bit to cross 67.36, but now it has settled at about 67.29. So good news as far as the rupee is concerned, even because any rate cut would have actually worked against the rupee because it would have been negative for the rupee, given the fact that that would mean that the interest rate differential between the bond yields in India and US would have narrowed further, and that would mean further fund outflows from the Indian debt market. So rupee and the bond market, the rupee reacting positively of course, and the bond market reacting negatively because that rate cut did not come in. So bond yields saw a sharp spike, whereas bond prices continue to fall again.
Well, so when it comes to the broader equity markets, right, we saw a small cut when the RBI policy decision came out, and I suspect that a lot of those traders took that as an opportunity to go short on some of those puts, because that was around the time when you saw a little bit of a rise in the option premiums, that is also the time when you go and sell because you have a higher premium to sell on, and that's exactly what's happened. So when it comes to the 8700 put, that is where we've seen a sharp rise towards open interest, a lot of writing taking place there. With respect to the Nifty too, as you can see from the chart here, we have seen a little bit of a decline, and then since we have seen a recovery. At the end of the day, Nifty ending flat, marginally in the green. So as far as the Nifty or the Bank Nifty is concerned, we really haven't seen too much. Sure, we have seen maybe around 1 to 1.5% cuts in some of the banks, but I suspect that a lot of that saw a lot of recovery as well in the course of the day.
Alright, so let's look at what really moved the benchmark Nifty 50 index today. Bharti Infratel, that was the top gainer, sitting on gains of about 3% after a lot of negative news flow and target price cuts coming in from brokerages on the back of Idea Vodafone merger talk confirmations. Cement was doing well. You have ACC and Grasim also, which was sitting well over 2.5% in the positive. BHEL 2.73% again, so extended its gains on the second day after a surprise earnings beat on that counter. On the other hand, pharma stocks were doing relatively week. So your Dr. Reddy's and Sun Pharma's trading in the green. Aurobindo Pharma also down about 0.6% ahead of its earnings, which is going to be tomorrow. Hero MotoCorp also gave up about 1%. We were expecting earnings to come in today evening. That apart, Axis Bank, HCL Technologies were also lacking strength in today's trade. But Agam, how's the trend been as far as the mid caps are concerned?
Well, I would say that we have 4 gainers for 3 losers, and in the broader markets we haven't seen too much. But let's take a look at the gainers. Let's start off with the gainers in the broader markets. We have BGR Energy, which leads the gainers in the mid-cap space. It's followed by Titan, of course, reacting to a very, very good quarter. Western India is also up 7.5%, followed by First Source Solutions, Jaiprakash Associates, as well as JK Cement. On the losing end, we have some weakness in Ramco Systems, down nearly 7%. It's followed by Gujarat Minerals, Prism Cement, Eros International, Snowman Logistics, as well as Natco Pharma. But once again, with respect to the way momentum is, it's with the gainers in today's job trade as compared to losers. We're waiting for results from Cipla as well as Hero MotoCorp today, and we're also going to be tracking, well, more numbers coming in from the pharmaceutical sector tomorrow, like Lupin and Aurobindo Pharma. So tomorrow is also going to be an action-packed day, so to speak, at least with respect to earnings. But that is all that we have for today. Thank you for watching Bloomberg Quint, and stay tuned in.